And silver can easily hit a new record high this week. Gold, is a little bit further from its high. Gold still has a couple of $100 to go because gold, I think, almost hit 5,400. So we need a bigger rally in gold than we do in silver. But they're both likely to make new highs. And I'm going to get into some of the fundamentals because there were a lot of very bullish news items that we were getting in the market. The money printing is going to continue, and so inflation is going to get worse. The dollar is ultimately going to crack, and all of this is bullish for gold and bullish for silver.
Gold and silver are once again proving their strength, erasing the fear that followed the last correction. Both metals are trading near historic highs, with silver just below its record and gold climbing steadily toward the $5,400 level. The latest rally is being fueled by renewed money printing, inflation concerns, and relentless government spending, factors that continue to erode the dollar's value and push investors toward hard assets. The pause we saw recently wasn't the end of the bull market. It was a moment of consolidation before the next major breakout. Peter Schiff, a longtime economist and advocate for precious metals, highlights how market sentiment has lagged behind the reality of prices. Many mining stocks remain undervalued despite record-level metal prices, creating opportunities for patient investors. As inflation worsens and fiscal recklessness continues, this bull market in gold and silver is far from over. Now, we present the clips from Peter Schiff's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
Sharp correction is quickly becoming a distant memory at this point. Gold was up about $70 today, but it was up $100 on Monday. So as I am recording this podcast on Wednesday evening, gold is back at 4,200. In fact, it did trade above that earlier today. In fact, gold was only higher than it is right now on 5 days in history, right? This was before the correction. Silver, on the other hand, has had an even bigger comeback. It was up better than $2 an ounce today. It actually traded above 53.50 intraday. It backed off a little bit. We're at 53.31 right now, but we're only about $1 below the record high. The highest silver got in that initial run a few weeks ago was 54.40. We came less than $1 away from that today. In fact, based on where silver is right now, there was only one day in history where silver traded higher than it's trading right now. So for all the people that were talking about the end of the bull market, there's only been one day that we've had a higher price. Yet despite that, there are plenty of silver stocks that are still in bear market territory. I looked at a couple of big ones today that were down. I think you're down about 30% in Coeur d'Alene from the high, about 20% in Endeavor Silver, about 10% in Pan American Silver. The only silver stock that I noticed that made a new high, because it was up 8% today, was Hecla Mining. But the fact that so many silver stocks are basically in bear markets when silver is trading at the second highest price that it's ever traded, it just shows you how quickly the sentiment soured just on a sell-off. And remember, silver got down to about $46 in change at the low, and now we're back up to 53 plus. And as I said, 50 is no longer the resistance. I mentioned that on the podcast I did on Friday when I just got back from the New Orleans conference, and I mentioned that there wasn't a lot of exuberism there. But it was tempered, and there was a lot of people that were worried about a bigger correction, a lot of people talking about taking profits. And what I was saying was the mistake that people are going to make in this bull market is taking profits too soon. Now, sure, traders, you could have sold and bought back these gold stocks. They did have a big enough pullback. In fact, you could still buy back if you got out right at the top. But most people aren't going to get back in. They're going to get out and, they'll be waiting for a bigger correction. The corrections are generally very swift. Maybe they're shallow and they're over with. A lot of people who probably bailed out aren't back in yet. And the next thing they know, we're going to be at record highs. Now, certainly in the metals themselves. Silver can easily hit a new record high this week. Gold, is a little bit further from its high. Gold still has a couple of $100 to go because gold, I think, almost hit 5,400. So we need a bigger rally in gold than we do in silver. But they're both likely to make new highs. And I'm going to get into some of the fundamentals because there were a lot of very bullish news items that we were getting in the market. I mean, of course, one of them, I think, is the end of the government shutdown. I mean, I mentioned that on the last podcast that it looked like it was getting likely that the shutdown would end. And by Monday morning, it was pretty much a done deal. And that was really the catalyst for the $100 rise in the price of gold. $100 plus was the end of the government shutdown. Now, a lot of people might have thought intuitively, well, wouldn't that be bad for gold? I mean, wasn't gold going up because the government shutdown was bad for the economy? It was creating uncertainty and that was benefiting gold. And so that once that uncertainty was behind us, once the government reopened and that was good for the economy, that would hurt gold. That's what a lot of people might have thought. But the opposite happened because the government reopening isn't bad for gold. It's the government staying open that's bad for gold. Because when the government is open, it's doing bad stuff. It's spending a lot of money. It's borrowing a lot of money. It's printing a lot of money. The problem with the shutdown was we didn't shut down enough government. Maybe if we shut down a lot more government, that might have been bad for gold. But the fact of the matter is it's business as usual in Washington, D.C., and that's good for gold because it means the reckless spending is going to continue. The money printing is going to continue. And so inflation is going to get worse. The dollar is ultimately going to crack. And all of this is bullish for gold and bullish for silver. That's why the prices are going up, right? And that's why they're going to keep going up. And in the meantime, the markets have not reacted. They're still shell-shocked from that correction. And they haven't realized, like I just said, silver was only higher than it is right now on one day. One day. And it was barely higher. Yet you have all these stocks that are in bear markets because of that. So it's not going to be long. All those silver stocks, I think, are going to make new highs. Gold stocks, some of them have made new highs. Barrick Gold made a new high. Their earnings came out on Monday. Again, blowout earnings, record revenue, raised the dividend. The stock's up about maybe 13% in the last 3 days. And it's at a new high, so it took out its high. I noticed I Am Gold, another stock we have even in our value fund. That stock hit a new record high today, or I don't know if it's a record going back, but 52-week high. So some of these stocks have taken out their highs, but the vast majority of stocks are still significantly below where they were when gold and silver prices were not that much higher than they are right now. But it's just that fear entered the market, and it's just taking a little bit of time for that to, go away. People have a memory of that. But again, that's what the markets are doing. They're trying to check the enthusiasm. They're trying to prevent people from getting too long, too leveraged by introducing some two-way risk in the market, right? It's not going to go up every day, but you got to be smart enough to recognize that this is a massive bull market. This is early, and any downturn is simply an opportunity to add to your positions. That's it. And yeah, you don't need to lever up. If you're going to lever up at all, you got to wait for the flush out. You got to wait for the big drop if you're going to do something on margin, right? Don't chase the market like that. But yeah, if you get a big pullback, you could take advantage of the fact that other people are getting chased out of this market.
The current market environment is revealing a dramatic divergence between tangible assets and speculative bubbles. While major indices, such as the Dow, continue to notch new highs, the underlying market tone is shifting sharply. Tech stocks are losing momentum, crypto-related equities are collapsing, and the broader digital asset space is showing clear signs of exhaustion. Even with Bitcoin hovering just above $100,000, its value measured in gold has dropped sharply, highlighting a deeper rotation occurring beneath the surface. Meanwhile, gold and silver remain near historic levels, supported by persistent inflation, relentless government spending, and long-term fiscal deterioration. The recent correction in metals is fading fast, and both markets look poised for another break to new highs as confidence drains from risk assets. The ongoing collapse in crypto stocks, combined with rising recessionary pressures and surging demand for precious metals, signals a broader unwind that could reshape investor psychology. When speculative wealth evaporates, capital typically flows back to tangible assets. That transition is already underway, and the implications for metals are profoundly bullish. Let's get back to the interview.
The Dow Jones hit another new record high today. We're getting closer, right, to a 50,000 Dow, which doesn't really mean much in the context of $4,000 gold, right? The media won't talk to you about that. But we're at, 48,250 or so in the Dow. So the Dow hit a new record high today. But the NASDAQ was flat to slightly lower on the day. So you're getting more of a rotation continuing out of growth, particularly technology stocks, which have had, they had problems last week and they're having more problems again this week. So you're seeing some money coming out of the tech sector. But before people started moving money out of tech, they were moving money out of crypto, right? The crypto industry has been decimated. Donald Trump, DJT, that stock hit a new 52-week low today. It's down over 70% from its January high. One of the reasons that it's doing so poorly is because it pivoted to become a Bitcoin treasury company earlier in the year. But look at, the Winklevoss, Gemini space station. That thing just came out not too long ago. It's down over 70%. I think the same thing for Circle. Circle is down. It's still up from the IPO because it went crazy. But if you bought it on the highs, I think I don't know if it was the first day or the first week, you're down 70% in that stock. But that stock bullish, also another crypto, down, I think 70%. I mean, these things are getting killed. MicroStrategy is down maybe about 55%. It almost hit a new 52-week low today, which might have been down about 60%, but it didn't quite hit it. Although I think it will probably do it tomorrow. Bitcoin itself is still hanging in there at just over 100,000, 102,000 and change. But Bitcoin is now down 35% priced in gold since its October high. This is November. So from last month's high to now, you've got a 35% drop. Now, in terms of the dollar, it's only down 19%, which is still a lot. But 35% priced in gold. This is a big deal that the entire crypto community is glossing over and acting like it's nothing, right? This is something. And I think people are ignoring this at their own financial peril. But I think what's a bigger indicator is what's happening to the whole crypto industry and all these crypto stocks, whether it's exchanges or the Bitcoin treasury fund stocks or the Ethereum treasury or whatever. Anything that is now connected in any way to crypto is getting killed. And pretty much anybody who bought into crypto-related stocks this year is getting killed. And, it's ironic because Donald Trump, one of the things he said was that he wanted to make America the crypto capital of the world, or not the crypto, the number one in crypto. He wanted America to be leading the world in crypto and then be the Bitcoin capital of the world. That's what he said was his goal. In fact, in that interview he did for 60 Minutes, he said that was the only thing he cared about, right? Forget about everything else. All he really cares about was making America number one in crypto. The problem is we already are number one. Trump doesn't have to make us number one. We are number one, right? More than half the people who own Bitcoin live in America, right? We're dominating crypto. We are the Bitcoin capital of the world. But soon we're going to be the laughing stock of the world. The last thing you want to be is number one in crypto because the crypto bubble is deflating. There's a lot more air that's going to come out of this thing. The country that leads in crypto is the country that's got the most to lose when the bubble pops. So because we're the leader in crypto, we're going to be the leader in economic damage done from the bursting of this bubble. Right? There's going to be significant implications for the U.S. economy, which is also good for gold because all of the losses and the malinvestments that are going to be exposed are going to help gold. And of course, a lot of people that work in the crypto industry are going to be out of work. So unemployment's going to go up. A lot of things are going to happen negative. I don't know if it's as as big, or maybe it is bigger than the bursting of the dot-com bubble. But, if the AI bubble bursts and the crypto bubble, I mean, that's going to dwarf the dot-com bubble. But I do think that the crypto bubble is bigger than the dot-com bubble all by itself. And we did get into a recession when the dot-com bubble popped, although we also had the September 11th, terrorist attacks. But I think we're already in recession. So I think that, all the job losses and investment losses, and remember, people are going to react to this reverse wealth effect, because I think if Bitcoin cracks this 100,000, I know it got below it last week, got to 99, but, they were able to circle the wagons and prop it up. But I think that if we crack and we really make a big drop in Bitcoin, I mean, even to like 50,000, which is still a really high price, for nothing. But, I think the losses are going to be substantial. And of course, if Bitcoin goes to 50,000, a lot of these stocks that are down 70% are going to be down 95%. And of course, some of them are going to be down 100% because they're going to go bankrupt. And I think a lot of these Bitcoin treasury companies that bought up a lot of Bitcoin are going to be selling the Bitcoin they bought at big losses. But when all these Bitcoin buyers turn into Bitcoin sellers, right, look out the way. And of course, the biggest seller of them all will be MicroStrategies. Now, I don't know how long Saylor can probably hold out more than most, but eventually he's going to be selling Bitcoin. But this is a key thing to look at. What's going on? Bitcoin's gone up a lot, but over the past 4 years, it hasn't. So sure, yes, I dismissed this thing 10 years ago, and, I didn't get in on it. And yes, I missed out on the opportunity to make a lot of money speculating on a Bitcoin bubble forming. Over the last 4 years, since Bitcoin hit 69,000 in 2021, people are better off in the investments that I have been recommending as opposed to Bitcoin. And meanwhile, Bitcoin is a lot farther below its highs than anything I've recommended. I mean, look at where gold and silver are. They're right near their highs. Bitcoin is far from its high. So there are a lot of people that now have big losses who bought in, and especially if they bought into these crypto-related stocks, because they've done a lot worse than Bitcoin, whereas, gold stocks have done great over the last couple of years. So people who bought gold stocks are way ahead of people who bought these crypto stocks over the last 4 years, right? I don't know what, there weren't that many crypto stocks to buy, 10 years ago. There were just the tokens. But people need to wake up and smell the tulips here and realize that this trade is over, right? All the big money has been made in crypto. Now the key is to get out. That's what they're trying to do. That's what all this stuff was about. That's why they needed Trump in office. They needed the U.S. government to pump this thing up so they could dump. That's what's been going on. And so if you're watching the podcast and you still are hodling some Bitcoin, get out. It's above 100,000. You'll thank me later. Get out. But don't just get out and go to fiat. You don't have to do that. Buy some real gold and silver.
The financial landscape is shifting rapidly as tangible assets regain dominance and speculative sectors begin to fracture under their own weight. While the Dow pushes to fresh highs, the underlying fragility is becoming impossible to ignore. Crypto-linked stocks are collapsing, high-flying tech names are rolling over, and the broader digital asset ecosystem is losing momentum even as metals surge. Gold and silver continue to push toward historic territory, supported by structural inflation, relentless fiscal expansion, and a growing flight from risk into tangible value. The so-called correction in metals has already faded, replaced by renewed strength that reflects deeper macro forces at play. As speculative wealth evaporates, capital is quietly rotating back into the assets that have preserved purchasing power for centuries. The divergence between precious metals and the crypto sector is more than market noise. It's a repricing of trust. Those positioned early stand to benefit as this transition accelerates. Hold conviction, study the signals, and prepare for the next leg higher in real money. Share your thoughts on his analysis in the comment section below. If you find this video informative, please support and turn on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.